Hi guys, we all know that Trump is going to impose tariffs of 25% on Canadian goods starting this Tuesday. Now, yesterday or last night, Prime Minister Justin Trudeau said the same thing that Canada will have retaliatory tariffs as well for American goods. So if you're like me, I'm concerned about how this will affect my Canadian savings and also my investments. So I will ask DeepSeek and also ChatGPT what to do just to find out what advice I can get from these applications in regards to how I could protect my savings in which is in Canadian dollars, right? So let's go right in. So we'll start with DeepSeek. So I just pasted question. What is the best thing to do with my savings in Canadian dollar before the US tariffs takes into effect? Let's see what it says. So it says number one, diversify your savings, convert to USD or invest in other foreign currencies. Number two is invest in safe haven assets, which are gold and precious metals and government bonds. Consider Canadian or US government bonds, which are generally safer during volatile times. Explore Canadian investments, stocks in resilient sectors which won't be less likely affected by US tariffs, such as utilities, healthcare, or technology. Real estate can be a good long-term investment. There you go. Though it requires careful consideration of market conditions, exactly because of the interest rates and also you have to be specific to the communities. So some communities are more in demand versus others, right? So you have to also do your due diligence with your realtor and explore or look at those nuances or those small information or details about that specific community. Consider ETFs, pay down debt, consult a financial advisor, monitor situation. So let's ask ChatGPT. What is the best thing to do with my savings in Canadian dollar before the US tariffs take into effect? So ChatGPT, diversify into US dollar or other currencies. Same as DeepSeek. Invest in hard assets, real estate also. Buying before inflationary pressures increase costs could be wise. There you go. Precious metals, commodities, lock in fixed income investments, GICs, government bonds, same with DeepSeek. Consider inflation protected investments. Like these are US issued. I have to look into that. Dividend paying stocks and reduce exposure to interest sensitive debt. So if tariffs slow the economy, interest rates could drop. If you have a variable rate mortgage, consider switching to a fixed rate before rates start moving unpredictably. So this is a good advice because we all know that Bank of Canada, one of its key mandate is to monitor the inflation. So right now, the government is saying that Canadian government is saying that they will help Canadians during these times. I haven't looked into it, but they are maybe looking at giving like serve type of support during COVID. So we all know what happened, right? During COVID, everything just went up because there's more supply of money and there's more demand on certain products like even real estate. There was a huge demand on real estate during COVID time. So too many dollars chasing too few products, right? So it can be inflationary. So the Bank of Canada had to raise the interest rates for how many basis points, right? It went up like very, very high. So you know how it is. So if you see, it's a good advice. If you see interest rates, as low as 3% or something continues to go down, maybe it's time to lock in. Just talk to your mortgage advisor. I'm a mortgage advisor, so you can also check with your banks, monitor those rates. So there you go. I think these are good advice. I'm just surprised These two programs did not talk about crypto or Bitcoin specifically. So if you're into crypto or Bitcoin, you might want to dig deeper or go into that rabbit hole and do your own due diligence if that's something, or that's another investment that you can also make to protect your hard earned savings. And that's it. Thank you so much for watching my video. Take care.